Morning. Well, investors betting on inflation usually make one or two choices. They can buy gold or they can put money into tips. And those are inflation bonds protected and issued by the U.S. Treasury. Well, JP Morgan says gold is the better bet. As you can see from this chart, the precious metal has been outperforming tips since 2005. And JP Morgan expects that trend to continue as U.S. economic recovery throws off more inflation. Gold futures are rising for a fourth session, with gold for December delivery on this Friday, as you can see there, up about 0.25%. Well, let's continue our discussion and focus on commodities. We have Michael Coleman, Managing Director at Ashleen Analytics, joining us live today from Singapore. Michael, welcome back to the show. We have a lot to talk about in these next few minutes. Let's talk about your asset allocations, because more than a third, around 35% of that allocation is in energy, and you are neutral on crude oil. Can you tell us why?
Yeah, directionally, the price of crude oil, certainly since March this year, has been much more driven by macroeconomic factors rather than fundamental supply and demand factors. And so an outright view on crude oil is really some combination of your view for risky assets in general, your view on the outcome of the dollar. And at the moment, we don't have a particularly settled view in those macro elements to the analysis. So the bulk of our energy position is actually relative value at the moment.
As we look at the biggest supply and demand gaps in the energy space at the moment, what would you be taking advantage of or telling investors to take advantage of right now?
A couple of things at the moment. The paradox of the petroleum market at the moment is that structurally the market is extremely weak. You have quite a significant oversupply, record inventories in terms of stocks to use ratio. There's probably over 100 million barrels of both combined between crude oil and petroleum products sitting in floating storage. Yet we have this relatively high flat price for crude oil, which is a function of investors taking a long-term view about global economic recovery. And so in the context of the sort of supply and demand fundamentals of crude oil, we think that refining margins actually are looking relatively overvalued, particularly in the Atlantic Basin. So in the last couple of weeks, you've seen product prices outperform crude oil prices in the USA. That doesn't look too sustainable given the sort of short, medium-term outlook for demand. So we'd expect to see crude oil outperform petroleum products over the next 6 weeks or so.
Michael, question on nat gas. It's been a laggard this year. Do you see that situation changing? Any opportunities in natural gas?
Yeah, again, natural gas is it's actually quite difficult to play. On the one hand, the nearby price of natural gas is extremely weak, but it needs to be extremely weak. Storage capacity in the USA is close to full. Demand is lackluster, production is strong, and therefore natural gas basically needs to kick coal out of power generation, and that requires a spot price of $3 to $3.50 per million BTU, which is where you keep seeing the spot price of natural gas gravitate to. At some point in the future, industrial demand will improve as the US economy gets better. Inventories will fall, and nat gas can recover. The problem is the steepness of the contango means that you're paying a very significant premium to take a view on mid-2010 nat gas prices already. So yes, at some point in 2010, nat gas prices maybe will be in a $4 to $6 range, but the forward curve is already there.
Michael, we have just less than a minute. I just want to get your thoughts very briefly on corn and wheat, because you said you were long corn versus wheat. Just briefly, can you tell us why?
Yeah, surely. Wheat, if we cast our minds back, wheat had a very strong supply-driven bull market, not dissimilar to what's going on in sugar at the moment in late late 07, early 08. And the farmers of the world responded massively to all-time high wheat prices. And the result is that today we have very large inventories of wheat. And so wheat has no supply issues. Okay. Demand is lackluster. Whereas corn is in a position now to attract incremental demand from biofuel. So.
Michael, sorry to leave it there. We've got to run. Michael Coleman from Ashleen joining us from Singapore.